Welcome to the Green Money Watch YouTube channel. I'm making this video for January 25th, 2020. The topic today is everyone can invest. That's correct. Everyone can invest. I'm making this video because there's a few myths out there about investing. One is you have to be super rich to invest. The second is you have to have saved hundreds of thousands of dollars to invest. It's another myth. And or you have to have some type of degree in finance or an MBA or something to that nature to be an investor. So this is one of the topics we cover in our classes, at greenmoneywatch.com, our live classes, that is. So let's get started how everyone can invest. And hopefully you guys take some positive information away from this video. When I say everyone, yes, that means everyone can invest. Doesn't matter, young, old, rich, working, poor, conservative, liberal, college, no college, doesn't matter. And I bet you're saying, yes, that's great. But how do we do that? Well, fractional share investing. Now, this concept of fractional share investing is relatively new, although fractional shares are not new. And fractional share investing has really made a comeback, or not say a comeback, but it's really kind of come to the forefront, is more like it, over the last 2 years. And let's talk about it. So fractional share investing, let's talk about what a fractional share is. So a fractional share is one share of stock broken into many shares. Also means owning less than one share of stock. So you basically, the brokerage firm will buy a stock and they'll divvy it up, so allow the customers to be able to purchase fractional shares, which actually, guys, this is good news. So for example, instead of buying ABC stock for $100 a share, so you only get one share for $100, you can buy $10 worth and own 0.1 share. And that allows everyone to invest. So you can think about all the stocks you can now take advantage of owning whenever you do fractional share investing. So let's go over that again. So instead of buying one share of stock for $100, you can now participate in that same company by buying $10 worth of that stock and owning 0.1 share. So it still allows you to be able to take advantage of the movement of the stock or the underlying. So that's a part of the great news, and that's how everyone can invest as well. So fractional shares are offered by now Schwab as the latter part of 2019. I think Schwab became more involved. I personally use M1 Finance as a fractional share company. I like M1 Finance because they allow you to be able to diversify on your own. It's not like just putting you into one single group of maybe saying aggressive or moderate or less aggressive type. You actually get to kind of choose how to diversify your own portfolio. It's also offered by Stockpile, Folio. I got Stockpile on it twice. Betterment, Stash, and etc. These are just a few that I know of. I personally use M1 Finance in this type of fractional share account. So it allows for active investing and, as I was saying, diversification. And the only thing active investing means is that you actually are taking an account of how your portfolio is being managed, instead of passive investing is just, okay, you put the money in and forget it. That's one way to do it. However, diversification is important because what works in one market may not work in another. So why diversification becomes one of the great components, and we talk about this in the class, is that it allows you to be comfortable in any type of market condition. So if the market is a bullish market, which means that the market is trending upward, or if it's a bearish market, meaning that it's trending downward, or a sideways market, meaning it's with bouncing back and forth within a certain range. Fractional shares can allow you to actually do that. And I just put like these few things up here, which actually can give you an idea of when we're talking about diversification. So when you're talking about bonds, generally when the market is going down, bonds become a safe haven. So that's one way for diversification. So if your portfolio has, say for instance, your portfolio has heavy tech, and you want it to diversify, you can diversify with gold. That means if tech is going down or the rest of the market is going down, then your gold has a high probability to be increasing because it becomes a safe haven. Same with bonds. Also with utilities with high yields. Only thing that means is utility companies that have that give you a percentage of profit, which is a yield. So it might be a utility company with a 3% yield. And so that means you'll get a dividend. And so these also become a safe haven whenever the market decreases. Tech is one of the companies, not necessarily a safe haven, but when the market is going up, it could be driven by technical stocks. It can be driven by financials. And this is just an idea of what diversification is, because I know we hear that term a lot, and it's never really been explained, at least when I used to hear it through the years. So this is one way of what diversification is about. Basically like hedging, similar to hedging, and just being able to manage your portfolio. And fractional investing, I know with M1 Finance, allows you to be able to do that with no problem. So you can be comfortable by putting in a little bit of money every month, and not having to worry, because you have your high yields dividend plays, you have your gold, your bond, your tech, your financials, and so forth. I'm not recommending that you do any of this, but I'm saying this is a part of what diversification is to be comfortable in any type of market environment, whether it be bullish, bearish, or a sideways trend. So hopefully you guys have been able to get some type of information and knowledge from this video in terms of fractional share investing. And if it was helpful, share with everyone. Subscribe to the channel. Visit greenmoneywatch.com. See the link under the video. Get in a live class if you're in the Washington, D.C. area. We're also doing a class in North Carolina on the February the 1st. That's a Saturday, February 1st at 11 o'clock. And there'll be more information. If you want more information on that, I'll send you a link. If you can email me at greenmoneywatch@gmail.com, greenmoneywatch@gmail.com. Thanks for your time, guys. Hopefully this was helpful. Have a good day.